Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and today we're going to take a look, of course, at the charts, Forex, commodities, stock indices. You can find always more updates, analysis, and information through these Twitter handles. So that's at Chris Warsick, at Admiral Markets. And we're going to kick off the webinar very soon. First of all, though, be aware that this webinar is shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more info on that. And also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar and later on recording is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. So today, as always, taking a look basically at a couple of steps, defining the trend of momentum, seeing where that flow is going to, looking for patterns for continuation or reversal patterns to understand the market structure a bit better, then looking for basically support and resistance levels to understand the triangle of technical analysis, and those joining this webinar or perhaps the Zero to Hero course know more about that. This is the triangle, basically these three things I use for understanding the market structure of the particular chart. I do that on multiple time frames, and then if it's interesting to trade or if I'm interested in potentially trading it, then I'll be looking further for the path of understanding where basically that path of least resistance probably will take price and where am I interested in trading it. So at this point, for instance, here I think the price could be overextended. I would rather wait for a pullback to one of these fibs, for instance, and I will wait for a break or a candlestick pattern at those fibs to be the trigger. Before we dive into the charts, we do have a day off in Europe, so that's something, or not in entire Europe, but it is in France, Germany, and Italy, among others, and I do think some other countries. Now, not here in where I live, particularly in Prague, but I do think that, as you can see, quite a lot of countries do have it. Spain too. So that's something. It could be maybe a bit slower movement because of that. Well, we'll see. We'll find out. But something to be aware of. We had the Aussie interest rate 1.5%. Stayed at that as expected. We had some PMI from China that came in at slightly positive, as you can see. So that's interesting, giving maybe a further boost to the Aussie here. But the Bank of Japan interest rate decision as well, coming in at minus 0.1%. We had a lot of interest rates, to be honest, this week. PMI on the dollar and PMI on the pound, but also interest rates not only on the Aussie and yen, but on the dollar and on the pound. As far as I remember, we have also NFP, FOMC statement. So you have to keep an eye on this calendar this week. Well, you always have to do it, but certainly this week. Next week, there's a whole other event coming around the corner, of course. Tuesday evening European time, there will be basically, or more maybe Wednesday morning late actually, we'll probably see the first results of the U.S. presidential elections. You've probably heard a lot about it in the meantime and might be, in the meantime, getting a bit tired of it. If you're tuning to the elections recently, then you might not be tired of it. If you've been following it for a while, that certainly is a risk because a lot of news is going about it nowadays. So, but with the week to go, we'll soon know the outcome. Probably. It is a crazy election so far, so who knows? But anyhow, let's move on and let's take a look at the charts. So yesterday, basically, for those that were able to watch my, let's say, weekly video, and you can find that by going to Admiral Markets website, then going to technical analysis. All right, analytics and technical analysis, and then you will find it Monday morning European time, your dollar and dollar yen. And I was talking about not only those two, but also the Aussie, for instance. So I was looking for a bounce at the pivot point, right at the 50 fib at 75.90. So that was a very nice bounce indeed that happened. That was part of a zigzag that I expected. Is anyone in a trade like that, similar to it, or maybe exactly like it? I mean, obviously I'm talking about my own trading, but perhaps some of you got inspired and thought maybe that could be an interesting trade too. I'm just curious if anyone joined. If you did, I think these lows in here, right here you see 3 candles. I think those lows are a perfect spot. Oh, thank you, Edith. That's great. I don't know why. Yeah, not sure. Anyhow, there you see it. So these 3 candles here, I was thinking about this 50 fib and pivot point, basically, and because among others, I don't want to repeat too much of yesterday, but there was a zigzag here, bearish zigzag. There was divergence between these bottoms. We had a first bounce. This was a hook back probably for more upside. Also on the bigger context, right, this was a support zone, and we're seeing a sell-off as we get close to resistance. But the buyers are stepping in every time higher and higher. So this is an ascending wedge chart pattern, which made me interested in buying at this zone. And if you're looking for a good spot to buy it, that's why I thought that this, for myself, that this zone was a good confluence zone for a bounce. So basically, everything came together here with the daily chart and the hourly chart for this buy. So a target could be up in here at 76.55 or 76.75. This was a strong 4-hour candle. I think that a stop loss just below these hourly candles could be ideal probably, and see if you could push more up to higher targets, maybe 77, 77.50, 77, 76.75. But locking in at least this profit, of course, very, very desirable, I think. And that would be roughly 56 pips, and the trade is still open. I think that's an ideal mix at the moment. For those not in the trade at this moment, I think it's a bit late at this moment, but this is a strong daily candle, so let's see how today's candle closes. Last week, I was talking about this candle, and if that daily candle was closed strong, it could be a breakout. It didn't, as you can see, big wick. That caused the ABC correction to continue, in fact, like this. And then we had a pin bar. Based on that pin bar also was part of the reasons why I was interested in going along as well. And now you're seeing the follow through. So if we see today a strong candle, contrary to last week, which we didn't, but if today we do, then I wouldn't be surprised to see a small dip and still one more daily bar. Now, if that daily bar is strong, we could see a continuation. And finally, maybe the bigger breakout. If tomorrow's daily candle, however, is again a wick, I wouldn't be surprised maybe to see a small bearish candle and perhaps then still upside. It depends also, obviously, to some degree on the news events, how this will play out. But so the first step is today's candle. For today itself, I think the Aussie has pushed quite a lot. I typically, when you get a big push like that, you got 2 or 3 pushes like this. So maybe if the oscillator would go back to the zero line like this and there's some bear flag, maybe later today there could be one more breakout, small push here before today is finished. But otherwise, I don't think it's a good moment now for the Aussie to the upside. I would definitely need to see some retracement. I think tomorrow could be a bit better day. Euro dollar was looking for a bounce in these fibs yesterday too. So anyone who's in that trade, I think there's a good bottom right in here. Any of these fibs would therefore be at least at break even, if not in a small profit in the meantime. So that trade is going our way. Did anyone manage to catch along in here? I know that this one to me is not that appealing compared to perhaps the Aussie or dollar yen, but I did expect personally to see one more push up to 110 or 110.50 before we get maybe a bigger ABC and then a bigger bounce still to the upside. And that all has to do with, let me get rid of this fib. That all has to do basically with this looking like it's the end of a correction and me expecting one more correction like this. So looking at this green part here, all right, looking at this green part, this first leg of a potential 3-leg before we get the downtrend. So if we look at this first leg of that 3-leg up, that first leg I don't think is finished and could easily push up before we get a correction. This is the first green leg. This would be the second green leg. And then I expect one more third green leg here. 1, 2, 3, or ABC, better said. So that seems to be happening. Now, at this moment, I don't think it's a good moment to trade it. It's at 109.85. 110 is the target. That's 15 pips from now. It could extend down up to 110.50, of course, but I'm not willing to trade it right in front of 110 personally. So it's, for me, not a good moment. I was talking about 109.40, 109.50. That, to me, made sense because then you're 50 pips away from 110. So there's sufficient room to deal with, and with the stop loss below 109.25, you're talking about a modest risk, or even 109 below 109. It's still a doable risk, reward to risk ratio there. Now, it could be different if price hits the minus 272 target, breaks a bit, at least a bit above 110, starts to make a bull flag, and then breaks that bull flag. There could be an intraday trade above 110 up to 110.50, 110.75 perhaps if it extends. that could be a possibility for later today. Especially if this candle is breaking through the Keltner here, that might make sense. Let me add some pivot points to it. There we go. So when we look at the pivot points, basically, we would have to look for maybe some break above the resistance R1s and R2s. Typically, price will stop at those, but maybe make only a bear flag or a bull flag. I always get them mixed up. So if price stops at the R1, which is 110, maybe the R2 would be better. These are anyhow very tight fibs at this moment. The distances are quite small, but basically if price were to hit R2, make a pullback, a bull flag like that to R1, and then make the breakout, it could be R3, it could be a target there. When that finishes, for those that are looking for maybe swing trades, I think that if we put a fib then from here to here on this first upside, I would expect a 3-wave down to the 61.8 fib and a bounce at the 61.8 up to the minus 61.8. Now, this bounce here might not happen because price, from a daily perspective, did break out here like this. So this could just be a hook back for more downside like this. And we might not get the bounce at these fibs. So from that perspective, I'm very curious that once it, let's say, runs out of steam to the upside and it starts to bend and make a downside, what I would need to see before I buy it is a clear ABC structure with preferably some divergence between these bottoms would be nice. Because then the bounce at the 61.8 or 78 or 50 fib becomes more likely. If price really falls a lot the first time like this and starts to make like an ABC correction like that, this is probably a bit more bearish and it could actually continue lower. So it's this bigger correction like that is certainly something you want to be, I want to be careful of, considering that this could be a correction itself. That's always a bit tricky when you're looking at corrections of corrections. When does it end? Which is really the motive direction? From my perspective, I think there's still a very high chance that we're going to see a larger correction, especially with the election still next week. I was already myself saying that this, personally, I think this is a break within a bigger correction and not the start of the downtrend. I still am subscribing to that, especially with the election still close by, especially with the bounce we're seeing now and a strong daily candle here. That would not change for the moment. So I think that small upside correction upside, and then somewhere in here, finally, the downtrend could finally start. Pound I didn't discuss yesterday, and seems to be anyhow bouncing off with zigzags with triangles. So yesterday there was some upside here, hitting the top of the triangle. Now it seems to be breaking through this triangle. So sorry, Craig. I hit the play button, but I'm not sure why it doesn't. Maybe I need to hit it twice or something like that. Quite annoying because I was showing a lot of drawings on the euro dollar. So let's see. Let me give you the quick version. Basically, this could be downtrend, so that could happen. That's why I want to see how price is moving down. If there's a lot of momentum like this, and then a bear flag, I'm expecting downside like this, right? But if price makes an upside and then starts to show ABC zigzag like this, there's a good chance of a bounce at the 61.8 fib. So if it makes the upside and bends here and starts to show an ABC zigzag like that, I think there's a strong chance of a bounce to 61 or 50 or 78.6 fib, and that moves to these targets like this. All right, so critical is how price falls here. If it falls like an ABC, I think it's probably going to extend further up. And in that case, we're going to see probably this happen. And then I would expect this blue three-wave up to finish at these targets, and then that's where the downtrend could continue. Alternatively, if this is a break and the start of a new downtrend, then this could be the pullback, but then I would need to see a lot of momentum here kick in, and I would not want to see a three-wave. Otherwise, it is looking more like a correction within a correction higher still. This is already day 5, so to me, this is already another clue that a bigger correction is most likely probable here. Also with the political event close by, as I said. All right, so that was a rough summary of all the drawings I was showing. It's so annoying because I clicked on that play button and I thought, okay, everything should be fine. Next time I have to double check. Pound is breaking now, so let's take a look at a bit of these pivot points here. Looks like it's getting to a buy zone as we speak, actually. Now the R1 is pretty close. So it could be better maybe just to let the price hit the R1. It's moving pretty quickly. So in this case, maybe better to let the price hit the R1, hopefully get some bull flag correction. Price should not go too deep. I don't expect it to go, in here. I would expect to bounce earlier. So one thing could be done is like a fib, wherever it stops. If it stops, I don't know, but if it stops at the R1, right? It tends to do that. So let me assume that for the moment, roughly at the R1. And it starts to bend a bit and make a bull flag like this, right? It could turn at 122.50-ish, 122.55. I think that is an interesting level for long, especially after this correction. And I think a stop loss probably below this bottom should be okay. And targets, probably 123.15. There's a nice R2 and minus 61.8 target. That's about 60 pips versus 40 risk. The stop loss could also go below 122.50 122.30, maybe 122.20, that would be a bit less. $28, a bit riskier stop loss, but it could be possible. If it extends, well, that could be 123, let's see, 123.50 perhaps, 123.75. Those would be targets as well. That could be if price really extends further. All right, so it looks like a bullish day on the or the start looks bullish. Now we never know. Obviously, if you know what I want to keep an eye on is if price hits R1 and doesn't make a bull flag, but really starts to fly down like this, and then starts to make a bear flag. Well, you know the whole thing is different, and especially if you see a 1 hour wicks here, this could be a false breakout as well, and probably would even think about shorting it if it breaks the support line here. Right, looking for basically something like this could happen too. So I'm flexible for both sides. It looks like a breakout. If it's a false breakout, I wouldn't mind trading it back into the triangle. If it stays above it, I definitely don't mind trading it away from the triangle either in this case. So now you have an idea what I'm looking for at least. But at the moment, not here at least. All right, dollar yen seems to be definitely an uptrend now. We got that higher high we talked about, breaking this top here, breaking this top too. So yeah, definitely the higher high. Now there's a bit of a correction here. This could be a zigzag, as I said yesterday. It would be interesting to trade it from 103.75 if price gets there. Now it might not get there. Alternatively, it could just stay in this triangle and then break the triangle, for instance. Now I would not be interested in this breakout because the trend line I don't think is confirmed. But if we get a bounce here and price moves down again and moves up again and then we get the break, that would be different. For me to trade it to the upside, I think I would need to see price break at least above this Keltner at the very minimum. And the R1 probably. This to me is still not, this is not an interesting long because I think it's all I'm expecting kind of a consolidation or a zigzag. Now it is an uptrend, so I'm not really interested in shorting it here. I think that a short yesterday, as it hit these fibs the first time, and as it was showing maybe candlestick patterns here, had more to it, had more value there in trading it. Now, I think it's not a good moment for such a trade because I would rather, I would rather be cautious. This is, with such a momentum, not strange it bounces like this. Now, I think it's kind of in no man's land. And I think there's a good chance it will turn here. Oh, sorry about that. I don't know what's happening. I'm using my drawing tool. Okay, good. I was using my drawing tool. But yeah, I think there's a good chance of a turn, but equally so it could break out too. So I don't have any preference here. I don't mind trading the breakout, but I need to see it break out. And I would prefer, though, to see it kind of make a triangle, a larger triangle, as I already said, or make that zigzag lower. So those were some of the majors. Let's take a look quickly at the odd New Zealand. Let's see. All right. So, well, if my memory serves me correctly, let's check 26th of October, Wednesday. We were talking in the strategy webinar about this candle. not sure if anyone remembers, but I said that's an important candle because if the close is near the high, that could be a breakout. But I still think it will bounce because of time factor and because of wave analysis, and I was expecting a bigger correction still. Either as a zigzag or as a sideways move. I did say though that if price is going that deep, a sideways move is more likely. But I still expected to bounce. We got the bounce. We got the wick here at the end of that Wednesday, at when the webinar of that day closed. Not the webinar, but the daily candle. We got the wick. Then we had a bit of a small pullback right down, basically to support. So USD was in a bouncing spot, and so was Odd New Zealand. I think Nenet, if my memory serves me correctly, talked about that as well too in his analysis yesterday. Odd New Zealand bullish continuation is possible. Yes, there you have it, right there. He talked about that too. So yeah, and me too, of course, last week. So this was a good bounce. Now it is approaching the R1. I think it's a bit of a tricky spot. Personally, if anyone's in that trade, I think moving it to break even is good. Taking the risk off and hoping for a break above this resistance. Today's candle, I guess, is just like the Aussie. It's important to see if we get the breakout here as well. This is a correction like this, but it could expand too. So we have to see how price responds to this resistance. All right, so we got that zigzag there. It didn't really retrace too high, but ultimately price falling down to the minus 61 point target. Here, minus 272 target. So we got a bit of that hook back, but the trend line ultimately, though, giving the bouncing spot still. So, yeah, is this a break, pullback continuation, or is this a double top? Always more interesting where there could be both patterns in play. Let's take a look at the weekly chart here. We got a couple of candles now, monthly candles above it. I think that next 2 days are going to be interesting. 1, 2, 3. This is the 5th day already. So if today or tomorrow does not break, then this does look like a bigger correction, I would say. Potential. I would be, for the moment, cautious with upside, I think. But if today's candle is bullish, is strongly bullish, then there could be a continuation. But I would probably need to see that daily candle happen there. This is DAX once again. Oil broke too, but is giving the hook back. Same hook back there, as you can see. That too has a lot of momentum. I would not want to buy against that daily candle. Considering yesterday's daily candle, probably one more downside is likely. Strong momentum here. Retracement, bear flag up to the 38.2 fib like this. And then a turn at the 38.2 fib seems, from lower time frames, the most logical at this point. And then price could fall to 45, 48, 80. And then we'll have to see, is there finally a bit of a bounce there? Because this is still a support zone. All right, price is at the 38.2 fib. We talked about that fib. Long 1280, finally getting there. Big wick at the 1282. Couple of candles not breaking this high. This could be a pullback. So I think that this could be the hook back after the bounce at the 38.2 fib. This could be a wave 1, this is a 2, this is a 3, this is a 4, and we could be going down for 5 to finish a bigger correction of C. So this certainly looks like a wave 4. This certainly looks like a wave 3. Definitely has that character. It responded to the 38.2 fib. And this could be a turning spot for one more downside to 12, 13, 272 target, and a 50 fib. And there could be a bounce to the upside at that spot. So looking at the 4-hour chart, we got 3, 5, 8 candles. This looks like a bounce spot to me. All right, we already had a bounce, but this could be the hook back after the bounce. Couple of dojis here. So it looks like if it breaks below these lows, these candle lows, it could be a turnaround spot. If this would have been a good momentum, that would have given extra confluence, but quite choppy. Price is just missed the 78.6 fib. And I think a candle close like this below these lows could be basically, I would consider this already, 2 dojis and a wick there. That could be already something. But this would be another way of looking at it when it breaks below these lows. And there could be some downside pressure like this. Now, how far, I don't know. It could be indeed the start of that downtrend I talked about on the higher time frames, but you never know. It could also just go down like this and then still bounce up to the 50 fib. The safest targets are always these two. But if this correction does break, then yes, it could fall a lot further. Let's see. Craig is asking if oil price normally moves higher when winter arrives in the northern hemisphere. Good question. I don't have any particular stats or patterns that I looked at that I know of, so I cannot provide anything like that. So all I could really talk about is some anecdotes maybe that I remember, and I've never really looked at that myself. It would make sense in a way, you would think, but I'm not sure how much correlation there is actually. Just looking at one winter, it goes flat here. Here is falling, and during the winter actually in fall. Here part of the winter was falling, then a bit of a bounce. Now we're only looking at a few, of course. There does not seem to be, the last 4 years, not so much of a reaction to it. But who knows, if you really look at a longer set of data, that could be different, you know? But oil, of course, is only partially used for, when you look at maybe winter usage, right? Winter, we have maybe more heating. That's more gas than oil, maybe, right? So oil for cars, I'm not sure if there's necessarily more driving in the winter. So from that point of view, oil is maybe used in other products that have a consistent usage or purchase demand throughout the year. Maybe gas could be more of a difference. I'm just speculating here and, talking out of my head. Let's see. What is Hermes? Or Hemis? Southern Hemisphere. Yeah, the gas goes up in the southern hemisphere. Yeah, got it. Yeah, the gas could indeed. That would make sense indeed. So the S&P 500 is really hanging here just above those tops from 2015, and it's not going anywhere. It's still relatively high. It's really just a tad off its all-time high here, I guess, and still staying above the previous top. So it's just waiting, either waiting for an upside or maybe a downside. I don't know. It really depends on the break. Probably will have some influence, not some, but there will be an influence with the elections here, I think. All right. Now, Nanette and I are going to be releasing a blog very soon. There was some delay because it's quite a lengthy article, and we're going to talk about all the election implications from our perspective. So that's going to be soon, probably today. Yeah, it's always, that's funny, Greg. Yeah, it's Craig, sorry. That's always interesting to look at these correlations indeed. Let's see, NASDAQ, FTSE, they all look the same. Nothing new there. Dollar index hitting this Bollinger, sorry, this Keltner band. Looks like we're seeing a bit of retracement. The euro dollar is following that pattern, isn't it? This looks like, to me, still a correction on the dollar index. Monthly candle is pretty strong, though. So maybe later this month we could still see, after correction, later this year, or maybe beginning of this year. We'll have to see. The timing is a bit difficult. Let's take a look at some other pairs. Alrighty, Kiwi is basically following the double bottom at 61.8. That's why we have this fib on. And seems to be bouncing off of that. And if it breaks, breaks this trend line. There could be a zigzag up to these targets, 73.25, 74. Bouncing off this support trend line, as you can see, it could be a zigzag up to resistance there. So there was a bounce here, and there seems to be a pullback and continuation. As we're saying, this looks like, at the moment, looks like a zigzag, in fact. Especially when you look at this big momentum to the upside. So 61.8 bounce could have been a good trade. Now, maybe an intraday upside. Let's take a look where the pivot points are. R2 already, that's quite far. Maybe the others are a bit better. New Zealand is moving up too, so let's take a look at the Aussie already. We said I need a bull flag. So probably the same for the Kiwi, in fact. Seems to be a bit far. Let's take a look at some other yen pairs quickly. In the meantime, Dogan is asking, can you please explain how to predict if it's going to break or respect the triangle, for example? That depends. I would say it depends on probably the structure. I don't have any rule, like fixed rule, like when it's going to break or bounce necessarily. So that depends. on the structure, multiple time frames, etc. I don't have any. I mean, I sometimes do look at time frame, right? 5 to 6 candles not breaking a high. In that case, yes, I do think that there's a higher chance of a bounce. If there's still 5 to 6 candles pushing and the momentum is pushing still with strong candle highs or candle closes near the high or low, then maybe a breakout is more likely. So if anything, then I use candlesticks, the closes near the high and the low, the size of the candles, momentum basically, and time factor, 5 to 6 candles not breaking, to understand if there's a bounce or break is more likely. So if there's any rule, then it's those two probably. Euro yen, we were talking about the zigzag like this. I can give you more examples in a second. We're looking at a zigzag like that on the 4-hour chart. We talked about the break of this trend line. We got a zigzag to the target, then a bounce. So what is more likely, a bounce or break here? And we saw a candlestick pattern, for instance, like this. So that was already an indication of a bounce. But then we also saw 1, 2, 3, 4, 5, 6 candles not breaking this low, right? So one way would be to trade that or look for some hook back like this. This was quite shallow, but just to illustrate the point, and trade the next swing basically. That would be the bounce. This is still part of a ongoing bounce with a lot of momentum here. And you can see it's trying to break through this consolidation zone. Is that interesting to trade? I'm not sure. It is close to resistance. These are good momentum candles. So is it a break or bounce? We could use the same rule. Look at this 4-hour candle, for instance, to say if it's breaking. If the 4-hour candle is a strong candle close near the high, I think that there's a good chance that this will be a breakout candle. Maybe look for a bit of retracement there. I will do that and put the stop loss below this bottom and look for that continuation. All right, there could be space to the next fib here at the 61.8. There you go. Thank you, Dogan. So basically, I was talking about, I'm not sure what you missed, but here there was the bullish 4-hour candle. There were 5 to 6 candles not breaking this bottom. So that was one of the first moments going to the upside. But also important was the support level here, the target and the trend line. Here too, we had 5, 6 candles not breaking the low, right? But we still had one more downside. So, it's a rule that I use, but I do want to see multiple things add up. I do want to see confluence. Otherwise, it's not always like that the case that you will get a bounce, right? Here you had 3, 4, 5, 6 candles, and eventually you still had bearish candles and one more push. Now this momentum is going to eventually ride out. So I think this will be a last push before we might see some ABC correction again to the downside. So we could have a good break, but be aware that eventually I think we're going to see some divergence and a correction again. Here, if you're looking for a bounce or break, this was a bounce, probably because of the big wick. If you're looking for a break or bounce here, this was a break probably, good candle close near the low. Now you have the British PMI, Dogan is saying, indeed. You got also American PMI coming up. Those are interesting levels, news events to keep an eye on. Absolutely. So 4-hour candle in this case I think could be a breakout. Pound yen has already broken. Let me take a look at the intraday levels for today. I think that just like the pound, it's in an interesting zone already to buy if we get a bull flag. It's already actually passed the R1, went to the up 2. I always want to see a bull flag and a break of that bull flag. Once that happens, I think it could be a good continuation for upside. I think 128.60 is probably Could be a good bouncing spot up to 129.50. Let's see, R3 is at 129.50. Indeed. So looking for that same thing. You see a bit of reaction R2. I don't think we'll pass through the R2 without some kind of flag or correction. Would be nice if we can get back to the R1 at least, if not just a bit below it maybe. 128.60-ish and for a bounce. I think that it looks good personally. There is good momentum here. Flag, momentum, flag, momentum. And I think it could continue. I would not expect price to go really much below 128.40 personally. Well, let's see if that happens. Obviously, it depends whether the dollar yen is going to turn here to the downside. If the pound is a false break, you know, those things do add up with the pound yen too. But if, let me say it this way, if there is a bull flag here and things look good on the dollar yen pound dollar, there could be a continuation up to R3. Will that happen? I really don't know. If it does, if there is a bull flag, I'm interested in trading it. But I'm not necessarily, you know, it's not a must for price to happen. It could hit the R2 and that's it for today. And it just flies down like this and there's a bear flag and it could make one more move down, in fact. All right, that's why it's better to be cautious here and not trade it to the upside in any case. I'm not really interested in trading it to the downside either because of the current uptrend, personally. All right, there's momentum on the upside here with these 4-hour candles. Would be different if this 4-hour candle is a big wick, for instance. Right, in that case, it could be an exhaustion, it could be a pin bar. If this 4-hour candle closes all the way down here, with the bearish close and a huge wick, then probably on this time frame, on the 50-minute chart, we saw big momentum like this, and we're seeing a bear flag. If that happens, we could see one more push down lower at the later part of today, or maybe the beginning of tomorrow. All right, let me continue, see if there's something more interesting to discuss maybe right now. Euro made a lot bigger push than I expected, but finally is making a zigzag here at this point. But let's see. Good 4-hour candle. Same, this is Aussie, so it's the same thing. Looking for a correction to the upside before trading it to the downside. That's about it. I really, at this moment, don't see much on these majors and major crosses for the moment. I think that if I make a summary, I do think there's a potential for bound out to continue. Let's see if that happens. I think that Euro might continue as well, but I want to see a break above 110. Aussie could be interesting tomorrow, but I want to see a bit of first of all, a good daily candle, or otherwise some bull flag on the 50-minute chart. That's valid for all Aussies and Kiwis, unfortunately. So, you know, that's a bit of a shame. The dollar yen, the triangle move down is a zigzag and bounce, or the breakout to the upside. So either, once again, either a triangle and then the break, either a move down lower and a zigzag completion and then a bounce, or if there is a break right here, I would need to see price break above R1. There's no triangle, but then this is the correction, maybe. Small triangle. Then the only way, I would have to probably look at the 50-minute chart, look for a break like this, a bounce at the R1, a pullback, and then a break like this above the R1 like this. And then look for maybe even a small bull flag here on the 5-minute chart. This is really a small zone. It's really an intraday zone. A swing trade would be if price does make the zigzag like this. That could be a swing trade from here, or if it finishes the triangle and then breaks out, those would be swing trades. Now we need. I would like to see more triangle before I think about the swing trades. Also, we got the elections close by. It's more, if anything, an intraday trade to the upside, just like the pound and euro. let's see if those happen. The Aussie we talked about already. Sorry, the yens we talked about. So yeah, not a lot of things right now, I guess. Yesterday was a bit more interesting. Hopefully you caught that video then from yesterday. Dollar CAD, not interesting either. No, I don't see much, to be honest, at this moment. So I guess we can keep the webinar a bit short. Yeah, that's a good question. If it's a false break or bounce, who knows? I really don't know. We'll have to find out. What I would be looking for at a R1 is a bull flag. Now, at the moment, this start could be both, in fact, because if it bounces like this and like that, this is a bull flag, right? If it flies down a little bit more, then it's starting to look like momentum, and then it could be easily a false break. This 1 hour chart, right, this candle would say something. If it gets a bounce, then it will still have a bullish candle close like this. Probably not a false break. Let's take a look at how long this 4 hour candle has left. One second, I forgot to change the color here. Okay, 122 hours. So 4 hour candle will also say a lot. This 4 hour candle too. That will give the most information about whether it's false break or if it's just small, volatility within that 4 hour candle. You see already a bit of a bounce. But the 4 hour candle will say a lot, the 1 hour a bit, and the 5 minute chart looking at the patterns will also give us information. That's why I want to see that bull flag before trading it or thinking about trading it. Alternatively, if it does fly down and then shows a bear flag, that will also give me information. Craig, let's see. The replay of the Hero to Zero should be available soon. I already sent it to the people at Animal Markets that are working behind the scenes on this course, regarding the visuals and how the materials are presented, etc. And so I assume it will be basically available any moment, or at least today, but certainly this week, I would say. Yeah, there's a lot of information indeed, Craig. We got the YouTube channel and the webinars. I'm not sure how the Zero to Hero course looks like. I would assume you log in and you probably have an overview of the videos that are accessible at that moment. So that's probably where that last one will be available too, the recording of it. I think it will be uploaded to that particular part. If you can't access that, for anyone else that is thinking, I would like to try this Zero to Hero course, you can do that by going to animalmarkets.com. And click on more info right at the front. At the moment, it's still up front, Zero to Hero, more info. And that's where you can register. Now, I understand, Craig, indeed, but basically you got the Zero to Hero course is just on its own. It's kind of like a standalone thing. So if you registered for that, you have everything connected to Zero to Hero will be there. If you are thinking about, for instance, webinars from us, you'll find all webinars in education and go to webinars that you'll find here. If you're looking for recordings, then you have to go to the YouTube channel indeed. And that you can do. I'll show you in a second how to find the Animal Markets YouTube channel. Regarding webinars, tomorrow we have strategy. Then it takes a look at price action trading school. Thursday, we take a look at understanding the difference between trading and analysis. And then next week, Monday, we take a look at the expectations of the U.S. election pre-fact on Monday. And Thursday, we take a look at the elections after the fact and talk about what could happen, in the near future. So that is basically the upcoming webinars. I hope that you'll join. We've got a lot of things to discuss. So looking forwad to that. Now the animal markets, so that's basically live things, live events coming up. Past material, past webinars or recordings, you can also find here in the YouTube channel of Animal Markets. And you can find that just by clicking on, basically just searching for Animal Markets right here. And this will look like this. Right, so you can see yesterday's video that I released, Neted's webinars, our past webinars. You can go to playlist. If you're looking for educational webinars, then you can go and click on, for instance, the Pro Learning Lab webinars. Right here, Pro Learning Lab. All right, and there are other topics, of course, that you can explore. All right, so that's, I know that, it's not centralized at that point, but that's because there's a split between what we're still showing and what we've shown, and then the Zero to Hero course. Yeah, I can imagine. I can imagine, Craig, indeed. Sometimes the time zones are a factor indeed. So that's why, luckily, we have some in the morning here, some in the evening, and we have the recordings so that everyone can. We try to upload them as quickly as possible, but typically these webinars, you will see that the ones that I'm talking about now, you will see maybe at the end of today, or the 6 p.m. ones, you'll probably see the day later. Let's see. After a breakout, how many pips do I think that I lost a trade? I'm not very certain what you mean with the question. Oh, that I missed the trade. Okay. Well, basically, it depends what time frame and how much space there's left to support a resistance. Well, let's take this, if 5 to 15, now let's take like this an example. So here, I think the breakout is still fine. 20 pips to the bottom, 40 pips to the top, right? So taking a breakout as basically price is showing momentum here, and the price closes near the high, above the Keltner, for instance, just to give you a hypothetical situation here, right? Just to make it easy. That would make sense. Now, if the next candle were here and not here, like this is a big candle, so it eats up a lot of space. Nothing we can do about that. But if the candle would be a bit lower, it would still make sense. But here, I don't think it makes sense because we're looking at small space and big reward or risk here. Now, the big candle maybe could be used as a stop loss. In that case, it could still maybe make sense. So it all depends on the relationship as well. But this relationship does not make sense, in my opinion. Sorry. Too big risk and too small of a reward. So it's more not necessarily the number of pips, but more what the stop loss is, what the size is, what the target remaining is looking like, and how far have we gone away from the breakout? So for instance, with the Aussie, the breakout was all the way down here and here, and there was another breakout. There's been 3 breakouts, right, basically. When that happens, yeah, there is just now just the attractiveness starts to become less, because eventually you're going to get into a situation where a reversal or a pattern is going to occur. So that is why at this moment I think that it's gone too far, and how many pips that is, it depends which breakout you measure, I guess, but it's also the number of breakouts that have a role. So in this case, I think I want to wait. With the pound, we've had a substantial correction here, so looking for basically a bounce or break in here makes sense, because it could push further like this. So the fact that we had a consolidation here makes the breakout interesting, whereas the Aussie has already pushed and pushed and pushed for a while. Now, at what specific spot within this push does a breakout make sense or not? Depends on how the candles are looking like as they're breaking out and how much space there is. What is the reward to risk balance? Maybe we can give take a look at one more example. I'm thinking you're specifically asking about breakouts, so let's see. Yeah, you're looking at 50, sorry, it was 15 or 5 minutes you were talking about. So let's maybe talk about some of these bullish breaks perhaps, but it also depends what you see as a breakout. So there are a lot of things you can see as a breakout that maybe you wouldn't see live, but this is just hypothetical once again. This is yesterday. Here's a breakout candle. For instance, this is a trend line. So is this a breakout? Is it too late? Keltner is close by? Maybe. There's a top in here, but this is the first candle anyhow. So if something like that happens, it could be a good idea to sometimes wait for a bit of a pullback, but even the candle close itself is sometimes okay. But if you have doubts, sometimes waiting for that pullback makes sense. Let's see. Breakout, for instance, here. There's some resistance up in here, for instance. So these candles could be breakouts, maybe this one even. Now the thing about these two, this one is right at the R1, so that is not interesting. This one is maybe better because at this point you still have some space, 27 pips, not a lot, and about the same risk, actually a bit more. So that's a doubtful one, but probably not in that case. Maybe on a 5-minute chart it would look a bit different. I'm not sure. Let's see if we can find another example on maybe the euro dollar. All right, here for instance, this 50-minute candle definitely breaking above the previous highs, above the Keltner, above the pivot point, and the R1 at that point looks like a decent amount away. Not a lot of pips, but I mean space-wise compared to the reward, it was okay. The Keltner is configured at the standard ones, which is at this moment I just use the standard ones, which is I believe this is the standard, but basically EMA, exponential moving average, the median, then 20, 10, and 2. All right, so some great questions there, Doga. Those are very important ones indeed, regarding candles and time factor and what is bouncing or breaking? Because one thing is doing the analysis with support or resistance, trend, momentum, and patterns. The other is then establishing those decision zones and looking for triggers within that, and then looking for bounce and breaks. So the bounce and breaks, I monitor mostly indeed through candles, time factor, but also certainly heavily reliant on the analysis, right? What does the analysis say, and are those zones interesting to trade? Only then would I use those things, because if you start using those things frequently or too much or everywhere, let's say, or not everywhere, but a lot of times, then they're not going to work as well, because they work best when there's some key kind of decision zones, key support or resistance, some key kind of aspects that pop up or appear within the triangle of analysis. So triangle of analysis is the first step, then determining those zones, then looking for triggers, then looking for bounce and breaks. So great follow-up questions, Dogan. And this is discretionary trading, obviously. This is what I add. Other patterns like wave analysis, those are one of those patterns I look at. But not everyone has to do that, obviously. There are other patterns out there, candlestick patterns, chart patterns, etc. Also, thank you, Craig, for some great questions there. And I think you have one more. Let's see, you only have one Keltner line on your chart, or mine has three. Two purple ones and one blue one. Yeah, it wasn't visible on the chart indeed at the moment, probably because the screen was blocking it. Yeah, it looks like more bearish bounce indeed, because this bullish bounce was nothing. Small candle, didn't get it up to the Keltner at all. So this is not looking like a bull flag anymore. And that upside is now starting to become questionable. Got 8 minutes left before this hourly candle is finished. If it looks like this, I don't think it's going to be a bullish bounce in continuation. In that case, we had an early push, and that was it. It hit the target. The R1 was it. 129.15. Sorry, that was the pound yen. I'm getting confused. 122.75. That was it. And if this flies a bit lower, and I would preferably like to see it go all the way down to 122.20. If it bounces there and then breaks, I will be looking for shorts, ironically. So folks, I'm going to finish the webinar now. Thank you so much for all your comments and questions, Craig and Dogan. Appreciate it. Thanks everyone else for joining and taking a look at the screens today with me. Hope to see you in the webinar tomorrow and the upcoming days, and wish you all great trading, folks. Talk to you soon. Cheers.